Welcome back to Crypto Insights, the show that deciphers the wild world of digital assets. I'm your host, and today we're diving deep into the most talked about cryptocurrency, Bitcoin. Specifically, we're going to be analyzing some upcoming predictions for its price and market trajectory. Buckle up, because it's going to be an insightful ride. Bitcoin, the OG crypto, has been on an incredible journey since its inception. From a few cents to tens of thousands of dollars, its volatility is legendary. But what's next for this digital gold? Are we looking at new all-time highs, a period of consolidation, or perhaps a significant correction? Let's break down the factors influencing these predictions. First, let's talk about the macroeconomic landscape. Interest rates, inflation, geopolitical events, these all play a crucial role. When inflation is high, Bitcoin is often seen as a hedge, a store of values similar to gold. We've seen investors flock to it to protect their purchasing power. However, it's a double-edged sword. Rising interest rates can make traditional investments, like bonds, more attractive, potentially drawing capital away from riskier assets like crypto. We've seen this dynamic play out repeatedly, where major central bank announcements can cause ripples across the entire crypto market. Another massive factor is institutional adoption. We're no longer in the early days where Bitcoin was purely a retail phenomenon. Major financial institutions, corporations, and even countries are now entering the space. Think about the landmark approval of Bitcoin ETFs in various regions, which opened the floodgates for mainstream investors. Or consider the growing list of public companies adding Bitcoin to their balance sheets. This kind of mainstream acceptance not only adds a layer of legitimacy, but also brings in a tidal wave of significant, and often more stable, capital. Speaking of institutions, let's consider the impact of potential future regulatory frameworks. Governments worldwide are grappling with how to regulate cryptocurrencies. This is a critical piece of the puzzle. On one hand, clearer, well-defined regulations could attract even more institutional money, as it provides a more predictable and secure environment for large-scale investment. It removes a lot of the uncertainty that holds big players back. Conversely, overly restrictive regulations or a sudden, harsh crackdown in a major economy could definitely stifle growth and send prices tumbling. The regulatory story is still unfolding, and every development is watched closely by the market. So, with that context, let's get into the nitty-gritty of some specific predictions. We've surveyed a range of analysts, from technical chartists to fundamental economists, to get a diverse perspective on where Bitcoin might be headed next. On the bullish side, many analysts are pointing their fingers at one huge upcoming event, the Bitcoin halving. For those who don't know, this is a pre-programmed event that cuts the reward for mining new Bitcoin in half, effectively reducing the supply of new coins entering the market. Historically, these halving events have been followed by significant price rallies. The logic is simple. If demand stays the same or increases, while the new supply is cut, prices are likely to go up. This supply shock, combined with the increasing demand we've been talking about, could be an incredibly powerful catalyst for the next major bull run. Furthermore, some predict that Bitcoin's role as digital gold will only strengthen. This narrative gains traction, especially as trust in traditional fiat currencies wanes in certain parts of the world. We're seeing increasing adoption in developing economies where citizens use Bitcoin to circumvent unstable local currencies and high inflation. It's becoming a practical tool for preserving wealth, not just a speculative asset. This fundamental use case is a strong pillar for long-term growth. Technical analysis also offers some compelling bullish arguments right now. Many chartists are looking at key support levels holding strong, which is a good sign. They're also identifying the formation of classic bullish patterns that could indicate a breakout is on the horizon. For instance, a common prediction involves Bitcoin retesting its previous all-time highs. If it can decisively breach those resistance levels, many analysts predict it could surge into a new phase of price discovery, setting new records. However, it's absolutely crucial to stay grounded and consider the more conservative or even bearish predictions. Smart investing is about seeing both sides of the coin. Many analysts argue that after periods of rapid, parabolic growth, a correction is not just possible, but natural and healthy for the market. These pullbacks shake out speculative excess and build a stronger foundation for the next leg up. One major concern is the high level of leverage in the market. When too many people are using borrowed money to trade, it can lead to cascading liquidations if prices start to drop even slightly, amplifying any downturn. Others express concerns about potential black swan events. These are the completely unforeseen circumstances that can drastically impact the market overnight. This could range from a major security breach on a prominent exchange, which would shake investor confidence, to a significant, unexpected government crackdown in a key market. While these are low-probability events, they are always part of the risk assessment in such a new and dynamic asset class. Another point of caution often raised is the influence of whales, large holders of Bitcoin. This includes early adopters, institutions, and major exchanges. Because they control such a large portion of the supply, their actions can have an outsized impact on the price. If a few of these large entities decide to sell significant portions of their holdings, it could create substantial selling pressure and trigger a sharp price drop, catching smaller retail investors off guard. And let's not forget the psychological aspect of the market. Logic and fundamentals are important, but never underestimate the power of human emotion. Fear, greed, and the infamous FOMO, fear of missing out, drive a lot of investor behavior. Bull runs are often fueled by euphoria and hype, pushing prices to unsustainable levels. Inversely, corrections are often deepened by panic selling. Understanding these emotional cycles is absolutely key to navigating the market without making rash decisions. So, where does this leave us? It's clear that Bitcoin's future is a mosaic of possibilities, influenced by a complex interplay of economic, technological, regulatory, and behavioral factors. There's no crystal ball, and anyone who tells you they know for certain what will happen next is selling you something. But by understanding these different perspectives, the bullish and the bearish cases, you can make much more informed decisions that align with your own risk tolerance and investment goals. My personal take: while volatility is a given, it's the price of admission. In crypto, the long-term fundamentals for Bitcoin remain strong. Increasing institutional adoption, the predictable supply shock of the halving, and its growing acceptance as a legitimate asset class all paint a generally positive picture for the long term. However, it's essential to prepare for bumps along the road. Never invest more than you're willing to lose. Consider diversification and always maintain a long-term mindset. This isn't a get-rich-quick scheme. It's a long-term technological and financial revolution. But what are your thoughts on Bitcoin's future? Do you think we're heading for new highs, or are we due for a correction? Let us know your predictions in the comments below. We love hearing from you and building this community conversation. Don't forget to like this video if you found it helpful. Subscribe to our channel for more in-depth crypto analysis and hit that notification bell so you don't miss our next episode. Thanks for tuning in to Crypto Insights, and I'll see you next time.